Most options traders have no idea what it takes to actually make money. What they think makes them money actually loses them money. But in today's video, I'm going to show you what you need to know. So from now on, you will know what trades to take, what trades to pass on, and how you can be guaranteed to make a revenue in trading. Now, with that being said, this is all educational purposes only. Don't risk anything that you can't afford to lose, but let's go ahead and dive in. Let's start with this trade. When I was looking for high trades, I was looking for big return. So I found this one, MSTR, 52% in 45 days. I'm thinking, yeah, this is nice. This is juicy. If I could do this, I'd really make it happen. Now, that's the illusion though, because high ROI does not equal high probability. And I'm going to show you exactly what that means as we watch this video. High ROI trades are actually the main reason that a lot of traders are not successful, because they don't know exactly how much they need to make, because they chase the big numbers without understanding the cost behind it. Today, I'm going to break down exactly why these trades look great but fail over time. Here's some trades I was scanning. Let's take a look at these. We got MSTR, SOXL, NVIDIA, 30%, 40%, 50% returns. They look incredible on the surface, but look at the circled risk numbers. You're risking $300 to make 100, or $365 to make 135. That's the problem. Those risk to reward ratios looked acceptable, but over dozens of trades, they become a slow, silent death on your account. I'm going to show you what that means. And most traders never calculate how many wins they need to recover a single loss, and that's where this strategy collapses. Here's what you got to understand. If you lose 50% of your account, you need a 50% gain to get back to break even. That's the part no one talks about. One deep loss completely resets your progress. This is exactly why high ROI trades fail. The great winners feel great, but the losers are too large. You can't compound consistently when your downside is explosive. Let me show you the math behind that. Most people believe that if they get 60% of their trades, they're going to make money. They're thinking win rate. But look at this table. If your losers are 2 or 3 times bigger than your winners, you can win more trades than you lose and still blow up your account. That's not a psychological problem. That's not a discipline problem. That's a structural problem. The strategy's math is broken, and that's what most of the traders deal with. This graph will tell you the truth. Even with a solid win rate, if your losses overwhelm your wins, your account trends down over 100 trades. This is why beginners say, I win all the time, but my account keeps shrinking. They're not crazy. The math is working against them. And before you think, oh, Casey, what about high probability trades? Let me show you why those fail too. Here are the high probability setups with the exact same trades. They have got a great safety cushion, great probabilities, but look at the credits. You're still risking 400 to make 100. It feels safe because the probability is high, but mathematically it's no different. The losses still outweigh the wins. Here's a simulation on this. Most traders eventually discover this the hard way. They switch from high ROI to high probability, and they still lose over time. This is a high probability stats. Why? Because probability without proper compensation is meaningless. If the credit doesn't match the probability, the trade has negative expectancy. So if high ROI is broken and high probability is broken, what actually works? Yeah, how do you win? What's the next step? Well, you need the odds in your favor, not emotionally, mathematically. You need a structure where the credit you collect is appropriate for the probability of the trade. And you need a system that ensures you never take bad risk to reward trades, even if they look safe on the surface. That's where the casino analogy comes in. Now let's take this a step further. Here's the kind of trade most beginners take without realizing it. You put in $3 and the market only puts in $1. If you win, you get their $1. If you lose $3. This is a classic bad bet, high risk, low reward. And here's the part most traders never calculate. If you lose just one game, you're down $3. To recover that, you need to win 3 times in a row. That means you need a 75% win rate just to break even. Well, let me show you how to fix this. We're going to look at the safe bets, right? 90% win rate. This is what people call the safe trade. This is an income trade everyone loves to brag about. Risk $9 to make 1. It feels safe because you win all of the time. But it's actually the most dangerous structure on this entire chart. Watch how this math works. If you lose just once, you're down $9. To recover that, you need 9 winning trades in a row, 9 perfect wins, just to get back to even. That means you need a 90% win rate just to stand still. And this is exactly what high probability traders run into. They go into months with collecting tiny wins, and then one normal loss erases it all. This is why your trading feels like you're climbing uphill. The structure is designed to fail slowly, quietly over time. When you understand this, the whole game changes. You stop chasing safety and you start choosing good math. So what do you do? What do you do to win? Well, this table will help you. This is the game changer. Make sure you bookmark this, take a screenshot of it, whatever. You could even print it next to your computer. This is it. This table will help change your trading. It tells you exactly how much credit you must collect for a given probability. For example, at 75% win rate, you need $1.50 credit in defined risk. This table is one of the most important tools in options trading. It tells you exactly how much credit you must collect for a given probability to have a positive expectation. At 70% win rate, you need $1.50 in credit for a defined risk trade. If the market only offers $1.15, you skip the trade. It's that simple. This table ensures you only take trades where you have the edge. This is how professionals trade. You stop forcing trades, you stop guessing, you trade where the math says yes. Now, what I'm going to show you is going to shock you, okay? Now, here it is. When you are looking for these types of trades, I searched. There is no trade. You can scan, you can look. It's so hard to find a setup that actually produces a profitable outcome. That shouldn't be a surprise to you because why? Because the brokers, they win, right? It's hard for the average trader to win. And so for us, when a setup doesn't meet the criteria, we need to walk away and only trade when we have a setup. Now, I tried going further out with expirations. I tried 45 days, 60 days, even 2 years, but the expectancy didn't change. More time doesn't fix bad math. You can't stretch a broken structure and expect it to work. The only way to fix it is to improve the edge. So how do we do that? You need 3 things. Number 1, volatility. Number 2, direction. And number 3, good pricing. When all 3 line up, you create a positive expectancy system. That's how you make money. And volatility is the key. Volatility is the engine of options pricing. It determines the premium, the movement potential, and the reward available. Most traders completely ignore volatility, and as a result, they take terrible trades during quiet markets. And when volatility expands, opportunity expands. Let me show you. I like to think of the market like a balloon. When VIX is high, the balloon is inflated. Prices are stretched. Premium is rich. Direction becomes clear. That's when income traders get paid. Now, when the VIX is low, the balloon is deflated. It's hard to make money. Premium is cheap and risk increases. Most traders do the opposite of what works. They trade when the balloon is flat and they hide when it's inflated. We're not going to do that, right? So now the next big secret here is direction. If we can get direction, we can overcome expectancy and probabilities, right? This is the secret sauce of trading. And so you don't have to be perfect. You just need a controlled direction. And how do we do it? Well, we find trades like this. Take a look. We trade when it goes below the 50 RSI. We find an uptrend. We time it perfectly, and we only trade things like this. Here's another example. If you use instruments like this and you use good credit spreads that pay you a great ROI, then you're on your way to success. This is what I teach. So if you want to learn my #1 system on how to replace income, check out my roadmap. This roadmap is going to show you how to replace your income. All you got to do is put the amount of income you want to make, what you're starting with, and how much you want to add weekly. And I'll give you a roadmap on how to do it. The strategy that I'm trading, it's completely free. So go ahead and check that. The link is in the description. By the way, there's a video on how I will teach you to grow your account with just an hour a week, with just one trade a week. Click the link directly above to get that video. It will blow your mind. And leave some comments, leave some questions, leave some suggestions. Do you think my math is right? Is it wrong? What have you learned? You know, I like to be challenged in these videos. I like to teach, but I also want to create this community where we can all engage with each other. Thanks for all the feedback so far. We'll see you in the next video.